Menaka, we're looking at this, and it's the overall high was, I believe, I'm looking at it now, on the 1st of December, and that figure is 18,812. So we're just 204 points away from that record high for the Nifty. So the question is, what is next for these equities as they approach that milestone?
Well, Rishi, it's been a handsome recovery since the lows of March. I think we've recovered 8-9% on both the benchmark indices since the March lows, which were prompted by the sell-off across Adani stocks and a little bit of nervousness across the rest of the market because of that Hindenburg research report. And now, of course, it's the Adani stocks recovery that has also helped the markets recover to some extent. So one key contributor there. But mostly it's a story of India's relatively better performance. And I mean that economically, and I mean that relatively better than China, because the recovery in China seems to be very tepid. And I think there was a ton of foreign money that earlier in the year, that's the calendar year, that it moved to the Chinese markets in the hope of a better recovery, which may now be finding its way back into India, given that we are doing record growth rates, at least at this point in, in comparison to some of the other major economies in the world. Relatively better are the words I'd use, Rish.
Yeah, let's get to CJ Chakraborty here as well, Menaka, and ask him as well the same question. What do we look out for now, CJ?
Oh, well, first of all, we have to look out for that record high level. I mean, we have to reach those levels first before we start celebrating. But clearly, the momentum at this point of time is with the bulls as far as the Indian equity market is concerned. We are just inches away from those levels. Probably today might be that day, the lucky day when we cross those levels. And I think the question next is the sustenance of this rally. Definitely, if you go by some of the strategy notes that have been coming out from foreign brokerage firms such as Amundi, Jefferies, and HSBC, they're all quite, optimistic that this rally can sustain going ahead, largely because, as Menaka mentioned, the relativity factor here, the stuttering recovery that we are seeing in China, and at the same time, the strong earnings growth as well as economic growth prospects that we are hearing for India. That is making investors reconsider whether they were right to, allocate or switch a lot of the funds towards the fag end of last year and the beginning of this year towards China. And since the disappointment has been there in terms of the rally, we have seen the HSCI index today in Hong Kong getting into a bear market territory, clearly makes it even more compelling to come to a market like India.
CJ, we're just about to hit the India Open, so a quick follow-up question to you. Not record, but large amounts of foreign investor money coming back in. Are they not concerned about some of the weaknesses in the India economic story?
I think at this point of time, Menaka, as you mentioned, it's all relative, right? There are, of course, concerns as far as consumption demand is concerned, because if you look at some of the commentary that has come in from a lot of the consumer companies, they have suggested that rural demand still remains quite sluggish. But there is optimism that monsoon, more or less, will largely be better. And they are hoping, because we are entering election season in India, we have the general elections next year, that generally tends to be quite good as far as consumption at the lower strata is concerned, because you have higher cash circulation in the economy, as you might know. And I think, therefore, the bet is that probably towards Q3 of this year, this 2023, you could start seeing some recovery in the rural economy as well, especially as inflation is on a downward trajectory. So there is optimism as far as consumption is concerned. And as far as the investment environment is concerned, clearly the capex companies are doing quite well. They're the best performers this year. And I think, therefore, that basically solidifies the optimism as far as corporate earnings growth as well as economic growth is concerned.